bearish USDA reports send prices tumbling, is there any end in sight to the selling? Floods close parts of the river system. Why don't traders care? Input costs remain expensive. Is there any hope for a profit in the year ahead? I'll have answers to these questions and more on this edition of The Buzz. Farmers hope for fireworks in the grain market to use as a selling opportunity around Independence Day. Instead, the week before the holiday fizzled with a dud this year after bearish USDA reports June 30th. Wheat and corn weren't immune from the damage, but soybeans bore the brunt of the bad news explosion from the latest government surveys. First, USDA reported June 1st soybean stocks of 405 million bushels, the lowest since 1977, but 30 to 40 million bushels above guesses from the trade and farm futures. The best explanation for the surprise, other than statistical error, was the likelihood that the 2013 crop was bigger than previously reported. The agency won't make that adjustment until the end of September, however. By then, the point should be moot because it appears farmers will be harvesting a huge crop this fall. The second part of USDA's sucker punch for soybeans put plantings at 84.8 million acres, more than even our bearish estimate, and up 3.5 million from March intentions. USDA stocks data was also bearish for corn, with the inventory almost 200 million more than we expected. That suggests slower feed usage during the spring, confirming the smaller than expected hog inventory reported last week. Planted acreage was virtually unchanged from March intentions, with the percentage harvested falling a bit due to flooding. The wheat data was mixed, but as expected was mostly ignored. USDA put June 1st stocks at 590 million bushels, 3 million less than its estimate of carryout earlier in the month. Seedings rose 650,000 acres, due mostly to an increase in spring wheat, but some of that ground also likely will be washed out. Prices sold off sharply Monday, with weakness continuing ahead of the holiday. The forecast looks good for the 4th, but flooding remains an issue in many areas. 3 locks were closed on the mid-Mississippi River in addition to those at the Twin Cities. So why wasn't the market concerned? Another report out Monday showed why. Crop ratings showed corn and soybeans in very good shape. End of June soybean conditions nationally were the best ever, and 75% of the corn is also rated good to excellent, a very good showing. For soybeans, these numbers project average U.S. yields of 46 bushels per acre for a crop approaching 3.9 billion bushels. Both would easily be records. Even with optimistic assumptions about demand, carryout could triple, sending prices below $10. Little wonder then that November futures quickly broke its uptrend Monday, losing 76.4% of its 2014 gains before the bleeding stopped, at least temporarily. That took new crop back to the revenue protection base price of $11.36, which at least provides some downside coverage for growers who bought enough of a safety net. We recommended pricing 50% of production earlier, so as it should add to the bottom line if prices continue to fall, as seems likely. December corn was already below its $4.62 base price for RP last week before plunging to new contract lows. Charts project down to $3.75, though that target, if it is hit, would likely come after a slow bleed, not all at once. Still, crop ratings project nationwide yields above 169 bushels per acre for a crop of 14.2 billion bushels or more, unless flooding slashes harvested acres. We won't really know about that until the FSA releases its first summary of the season on August 15th. We'll already have results of USDA's first survey of corn and soybean fields in 2014 production, which is out August 12th. By then, winter wheat growers will be starting to finalize seeding plans for the fall. The picture may not be a pretty one. Based on 2015 crop futures, the projected average cash price for next year's wheat could fall to $5.80 or lower, compared to $6.87 for 2013 and $7 this year. The trouble isn't too much wheat in the U.S. Winter wheat conditions have stabilized and the spring wheat crop looks pretty good. But production here should still fall below 2 billion bushels, keeping carryout from increasing much, if at all. However, the rest of the world still has wheat to sell. Romania and Russia captured the latest Egyptian snap tender this week, exploiting lower shipping costs to win the business again. Rains are raising a few concerns about the crop in South Russia, but otherwise, conditions around the world look decent. El Nino could cause problems, but until damage occurs, end users aren't likely to chase the market higher. That's why it's critical to buy inputs wisely this summer. So far that hasn't been easy. Though fertilizer costs broke on international markets at the end of spring, the retail price here is still working off high spring costs. This week's break in prices may keep that stalemate going, but push your suppliers for deals. My fair value targets are $600 to $650 for ammonia, urea at $445 to $465, DAP at $515 to $540, and potash around $450 to $465. Buying diesel for fall harvest hasn't been easy either, thanks to world tensions that elevated crude oil costs. Wholesale benchmarks are finally pulling back a little. Start buying now and every nickel lower. Also look to lock up propane costs. That market looks like it's put in a summer bottom. Well, that's all for this week. USDA releases its next supply and demand report July 11th, and I'll be back with the details on the next edition of The Buzz.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of